Visa reported its financials. Strong revenue, strong earnings. Initially, stock spiked higher. Now Visa stock is moving lower. What's going on with Visa stock? All in all, it has everything to do with what's happening in the economy. The Federal Reserve needs to keep interest rates higher for longer. This will affect transactions with Visa cards. We're already seeing some results where Starbucks just dropped 15% its stock because of lower foot traffic. McDonald's, the low-cost leader, lower foot traffic. Pepsi, they're all saying the same thing. The consumers tapped out. As interest rates remain higher, consumers have to service higher debt. Now, the Federal Reserve is going to be stuck here at this interest rate for about 6 months as they wait for the presidential election. There may be some damage to the economy. Those higher interest rates, which the Federal Reserve just met this week, is starting to affect Visa stock. So I wanted to break down the financials and give an idea as to where I think Visa stock should be. First and foremost, it's overpriced. Secondly, it will probably move much lower as the economy contracts. Let's jump into the computer and I'll break down Visa stock. So we're seeing sort of a difference in what's going on. Visa for Q2 earnings reported higher volume growth, which is higher transactions, which that's actually how Visa company itself makes its money, through transactions and consumer spending overall. They not only transactions, but dollar price of those transactions. That's where Visa is driven with its income, revenue, and earnings. But we're also seeing the consumer being tapped out. So the first thing you ask the question is Visa stock a good value investment given the fundamentals, the financials right now compared to benchmark investing rates? And that's where I start with when I look at a value investment. But before I even do that, I ask the question about the economy itself. We just had the Federal Reserve. They're going to keep interest rates higher. This is starting to restrict consumption from consumers. Expenditures, incomes are a limited resource. They're finite. And consumers are starting to have to, because of higher interest rates, pay more into paying down their Visa debt that they have on credit cards, not with Visa company itself. So that's something that's occurring. We're starting to see some companies report that there are lower foot traffic. McDonald's, I mean, that's the low cost. If you have to cut out McDonald's, where are you? The stock, initially you can see the earnings tab at the bottom spiking higher, but then slowly, sluggishly moving lower. And this really has a lot to do with the fact that interest rates are going to remain higher for longer, and consumers are going to have to pay down that debt on higher interest rates. But again, I start with the question, what's a good value investment price for Visa stock? Here's a bigger chart look. This is the weekly chart. I expect we'll probably see ranges, say 180 to 220 once again. Assets, generally speaking, are overvalued. Take a look at gold, take a look at the broader stock market, Bitcoin, things like this. There are assets that are overpriced because of inflation. Well, interest rates are going to remain higher. This will affect all of those aspects of inflation. Here's something I've been kind of pointing out. McDonald's, Starbucks, Pepsi, I've been reading articles on these companies, lower foot traffic. This is Starbucks, and as you can see, they took a dump, 15%. Now, lower foot traffic, 4% decline, same stores year over year worldwide. So this is affecting pretty much the entire corporation. A lot of countries, Europe, probably in a recession, although we don't have specific proof of that just yet. You usually can look in the rearview mirror and realize, oh yeah, recession. Economies throughout the world are starting to contract because of economic growth. Starbucks missing on earnings and revenue, 15% drop. To me, that's something that's very telling. All right, quarterly revenue for Visa, year over year, much higher. continually growing revenues. And as a value investor, this is one of the first things you want to look for and ask the question, given this chart, reasonably, what can we assume for the future of Visa? All else equal, quarterly revenues will continue to grow higher and higher and higher. Visa management said, yeah, we're probably going to see continued growth. But I don't believe that, simply because the economy is starting to show signs that it is tapped out. Take a look at employment numbers. We get employment numbers this week, and employment numbers are likely to show slower growth. We did see slower growth in GDP, albeit we're still printing 5.25%, so that's slower growth from a really high level. But when you take the context of the higher interest rates and what that's going to happen, the fact the Federal Reserve is likely have to leave interest rates higher for at least 6 months until after the presidential election, that could do some damage. Consumers are going to be stuck paying higher interest rates for 6 more months. That will have an effect. Projected revenues 2024 35.9 for Visa, and then 39.5, a pretty decent jump for 2025. I don't believe they hit it. Plain and simple. Net margins. This is one of the things I like most about Visa. Surprisingly, the net margins kind of dropped a little bit. Year over year, they outperformed 2023 versus 2024. They're keeping 52.3 cents for every dollar that they bring in. At the end of the day, Visa is nothing more than a computer company. All right, they allow other people to do all the swiping, and all they do is process transactions. It's one of the ultimate companies for a value investment from that perspective. Take a look at the other end of the spectrum, Alcoa, Ford, where there is a lot of capital-intensive machinery to create a product. When it comes to Visa, at the end of the day, it's a computer system. And all they're doing is when you go to a point of sale, grocery store, wherever it might be, you're the one who's actually doing the work. Visa processes that transaction. They don't really get involved in the actual lending out or anything like that. That it's your bank through Visa to the grocery store's bank. They just keep taking that little bit of a chunk, 52.3 cents per dollar. This is one of the highest gross margin or net margins you can find in the stock market. Not the highest, but it's pretty sweet. One of the reasons why I like Visa, MasterCard, PayPal, they have high net margins. Projected earnings per share, $9.93 for 2024 for Visa, $11.13 for 2025. Price to earnings ratio, this isn't exactly super high. There are a lot of companies that outperform 31.7 price to earnings ratio. The other thing about Visa is, so when you take a look at the broader stock market, Visa is actually kind of right at that median level. There are a lot of companies that are overpriced when it comes to price earnings and some that are underpriced. But Visa really kind of comes in at a sort of median number for price to earnings, current earnings. Given that, it's sort of one of those things that even though it's overpriced right now, it's pretty much always going to be overpriced, except, going back to 2022 when they printed 25.9. So what you're trying to do is hopefully, if you're trying to optimize your investments, wait for those numbers, price to earnings, when they drop significantly below, maybe hitting 20 to 25, because those are opportunities that don't come along too often with Visa, that its norm is higher than normal. Here is a look at the U.S. 10-year Treasury yield, printing about 4.6% right now, kind of eased off a little bit. 4.59 I think is where it finished for the day. Visa stock itself, the next 4 quarters, you're going to looking at $10.42. Given the price, $275, that's a 3.789% future yield. Now, you don't exactly get 100% of that yield. There is a dividend, but then Visa could pay down debts. It could also invest into new business opportunities, buy back stock to drive investor shareholder value. But your comparison is 4.6%. And if that's your benchmark, On the one hand, you want to maximize your investment opportunity. Time is money. 3.78%, lower than 4.6%. What's your downside risk for Treasury investments right now? The benchmark. The Federal Reserve eventually is going to lower interest rates. When they lower interest rates, price inversely move up. So your risk on an investment locking in 4.6% right now is pretty low. The Fed just said they don't expect that they're going to have to raise interest rates. They pretty much took that off the table. But they didn't put lowering interest rates on the table just yet, that they're not there. So the 10-year is going to adjust to the information we have right now. But then the Federal Reserve is going to quickly lower interest rates. So your downside risk in the Treasury is very minimal. Smart money, savvy investors are getting out of these lower yielding stocks because the economy itself is going to be restricted by the higher interest rates. Consumers are showing signs of less consumption. They're going to have to pay down debt at higher rates. Incomes are a finite resource. Because of that, Visa stock is likely teetering. It's moving lower despite having better than expected numbers. The proof is right there in the charts. More than likely, Visa stock moves lower as the economy restricts itself. From there, Visa as a long-term value investment, Visa stock would be a solid move. In the meantime, what I'm doing, I'm putting all my money, not all my money, I'm putting a lot of money into treasuries. I'm buying TLT stock, which is an ETF on the long-term Treasury Yields price, actually. I'm putting my money in TLT, stepping away from stocks because the TLT will probably appreciate 20 to 30% over the course of the next, say, 1 to 2 years. But then once the economy starts to heal up after hyper restrictive levels of interest rates, which we can see right here, the 10-year, then it'll be time to buy into Visa stock. Visa is a long-term value investment, just not right now. Plain and simple. You first have to look at the economy. The economy will be restricted. Visa stock is starting to trend lower and lower. Your risk is higher with an investment in Visa stock. That's how I'm approaching this. I'm looking at the economy. I'll get into stocks later down the road. Right now, for me, bonds, easy bet. Make sure to hit that like and follow button down below if you're just finding this channel for the very first time. If you're looking for written analysis on Visa stock and all the other stocks that I cover, my Substack the link is in the description down below. There is a free email version of the written content and a premium. Make sure to follow along for that. We'll see you in the next video.